1 second, and let's invite him to join the conversation. Did that send? I believe I've sent it to you, Mr. Brown. Let's give it a second, see if it's got. Yes, no, yep.
Good morning, Ryan. Good morning, everyone.
Good morning. Oh, are you okay?
I'm absolutely fine. Why?
I know you sound a bit grumpy, to be honest.
No grumpier than usual, mate.
Oh, well, in that case, I'll move on. Nothing discussed in this space is set and constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, including its affiliates and hosts, which, as you know by now, is Mr. Michael Brown, woo, and myself, Mr. Ryan Paisley, woo. I don't know what's. I think my throat is completely buggered by having to have the radiator on all night because it's bloody cold.
All night? Do you not have a nice thick winter duvet that you can keep yourself warm with?
I've got no blubber, unlike yourself.
Wow. Wow.
It's
Fucking
Friday.
hell.
Friday, I'm fighting.
Deary me, I'm going to go and have a word with your HR department at some point.
Wait, he's listening. Quick, move
on.
Oh,
no, I just saw that. Right, indeed. Let's move on. Good morning, everybody. It was something of a quiet-ish day yesterday. Of course, US markets largely closed in observance of the National Day of Mourning for former President Carter, whose funeral was yesterday. So we saw cash equity trade closed. Treasuries were trading, although did have an early close, and we saw pretty much no movement across the fixed income slate in the United States. Although, again, we did see gilts continuing to soften here in the UK. 10 and 30-year yields yesterday opened about 10 basis points higher apiece. They paired probably about 2/3 of those losses by the end of the day, closing up by about 3 or 4 basis points. And we've opened another 3 or 4 basis points higher at the long end this morning. So still concern in the market about the perilous fiscal backdrop here in the United Kingdom. And of course, that continuing to be felt in the currency space as well, with cable down by about 0.5% yesterday, trading to its lowest level since November of 2023 and remaining south of the 123 figure in early trade this morning. In terms of fresh developments on the fiscal front yesterday, we did hear from the Chief Secretary to the Treasury, who is a chap called Darren Jones. He is effectively Rachel Reeves' number 2, and he was speaking in response to an urgent question in the House of Commons yesterday that was asked, asking for a government statement on the current market turmoil. Jones really said absolutely nothing of any interest, to be honest, saying that the government does not comment on specific market moves and that the market is functioning in a normal and orderly way. Of course, if the government are saying that this is normal, then that's really giving no one any excuse to do anything other than just keep selling, which is exactly what we've seen since those remarks. I think...
Right.
Sorry?
Go on, you finish your bit.
Well, I was going to say, I think that this just shows the issue with having someone in this job who has zero financial markets experience whatsoever, because the remarks were utterly tone deaf. Also, Rachel Reeves herself couldn't even be bothered to show up. She was too busy packing her suitcase to go off to China. And what's even more remarkable is, and I think, well, I hope that Mr. Jones was trying to crack a joke when he said this, was that apparently he can't even afford a subscription to Bloomberg. You're the number 2 in the bloody Treasury, man. You should have a terminal on your desk, and so should everyone who works for you.
Well, I'm glad I let you carry on, because that was the 2 things I was going to make. But also, like, who was it? It was our friend Ryan from Forex Analytics, Forex Live. And you could actually see what this guy spent last year. He spent like 200,000 on staffing costs. Now, I don't even think he's referring to a Bloomberg terminal. He just said Bloomberg News. I can't afford a Bloomberg News subscription, which is £40 a month.
It's ridiculous.
And mate, look, yeah, if he wants a PIQ subscription, I'll give him a good rate. But what the fuck are you doing, guys?
And even if you were trying to, joke around and say that as a sort of
Now's
throwaway
not the
answer to a
time.
question. Yeah, exactly. Do it when the market's calm, not when everyone's on edge. So yeah, the gilt market's still on very, very shaky ground indeed. Of course, as I said, the selling pressure continuing this morning. And of course, this comes ahead of the non-farm payrolls numbers that we get a little bit later on, which I'll cover momentarily, which could be a catalyst for further losses. In terms of other bits and bobs from yesterday, as I said, news flow relatively light. We did have some Fed speakers, though, all of whom very much sticking to the script that they are looking to continue bringing rates back down to a more neutral level, but they will do so patiently. The pace of rate cuts will depend on incoming data, etc., etc., etc. We also heard from BOE Deputy Governor Sarah Breeden yesterday. She was also very much sticking to the BOE script, saying that she continues to favour a gradual approach to removing policy restriction over time, that it's hard to know how fast to remove policy restriction. She also commented on moves in the gilt market and again just said that things are orderly. Of course, not only has Rachel Reeves packed her suitcase and gone off to China, Andrew Bailey, the Bank of England governor, has joined her on that trip. Oh, and so has the head of the FCA. So three of the people who you might want kicking around when things are a little bit shaky in the markets have gone on a jolly up to Shanghai. So good for them, I guess. Last but by no means least, we did have some data out of the Eurozone yesterday. Retail sales rising by 0.1% on a month-on-month basis in November, a rebound from the 0.5% decline that we saw in October, but marginally below the market's expectations of a 0.3% increase. And that is pretty much it from me for now.
Thank you very much, Mr. Michael Brown. Obviously, before I just crack on with the some selected headlines from the overnight news roundup via our good friend Zach. Big shout out to Cam, who's obviously doing our crypto stuff. He'll be publishing something in probably, I'm guessing, about half an hour's time. And I'm actually meeting him for the first time today. Got to treat him to a pint, so he's in for a right treat. Me and on Friday.
That poor bloke.
I'll stop it. But anyway, the macro space, Chinese President Xi will attend will send his high-level envoy in place of himself to US President-elect Donald Trump's January the 20th inauguration. This was an option that had been touted from the start. Obviously, if you remember, President-elect Trump did invite Xi, and when it was turned down, there was a bit of a hoo-ha with people saying that, oh, this is a bad sign, but I don't think it's that bad at all. Chinese strained pension system already in danger of running out of money in a decade's time. It faces a new threat from young workers who are showing preference to spending their money rather than saving. What's a pension? Japan.
Well, I was going to say that's something everyone else has been dealing with for the last 2 decades or so, isn't it? It's not exactly a new phenomenon.
Japan's Nikkei's share average sank for a third straight session on Friday, dragged down by a tumble for Uniqlo's store chain operator Fast Retailing, which is 12% of the weighted of the Nikkei, follows a disappointing earnings report. As Michael alluded to, Chancellor Reeves is off on a jolly to Shanghai, so I don't need to read that one out. Some 700,000 British households face a jump in mortgage costs when their fixed rate deals end in 2025. That's this year. An upheaval in the UK financial markets over the recent weeks threatens to drive borrowing costs even higher. Britain's power markets is set to remain tight on Friday, capping a week that's seen prices soar as temperatures plummet. Wind generation may plunge to half of Thursday's levels, and yesterday's levels was pretty bad, while heating demand will stay at an 11-month high. That's because it's bloody cold here in Britain. Over in LA, where it's
actually, sorry, I was just going to say on that, our very good mutual friend Ewan Smith sent me a thread that's been doing the rounds on Twitter over the last few days, and actually, by no means am I an expert on power markets whatsoever, but it seems that things are getting very, very tight indeed. And according to whoever this is, Catherine Porter, who's an energy consultant, the UK was within 580 megawatts of either demand control or a blackout, and that was on the 8th, so that was on Tuesday, which I guess is what happens when you rely on wind to generate power and then there is no wind.
Obviously, I'm not saying the Labour Party were at fault here, because it's very, very unfair to say that, because obviously this is stuff that's been
and they've only had 6 months, so
yeah, exactly. But however, everything is kind of becoming reminiscent of 1970s Labour Party ruling the UK. Power cuts, 3-day weeks, markets all going everywhere. Yeah. Oh, what a time to live in London. Anyway, LA wildfires are set to be the costliest blaze in US history, analysts say. The first initial estimate of damage from the inferno soared to close to $50 billion. That's according to the Wall Street Journal. Geopolitical news: Supreme Court, the U.S. Supreme Court on Friday will hear oral argument. Oh God, Ryan will hear oral arguments in the case involving the future of TikTok in the U.S., which could ban the popular app as soon as next week. A Hungarian bid for a major energy provider in Romania is under review after suspicions arose that motives behind the inflated offer, including fears of Russian influence. I think we probably know it is Russian influence. In a couple of the headlines from equity space, TSMC reported fourth quarter revenue that easily beat market forecasts and hit its own expectations as it reaped the benefits of AI demand. Tesla has launched a revamped version of the Model Y car in China. Its best-selling yet aging model with a starting price of, well, let's call it $56,000. It's just a few dollars shy of that. The revamped version includes a variant with longer range of up to 447 miles per charge, and that's according to Reuters. And that's your lot from me. So back to you in the studio.
Good stuff. Thank you, mate. Well, looking ahead to the day ahead then, of course, it is actually, no, it's not. I was going to say it's the first Friday of the month. It's not. It's actually the second Friday of the month, but it is nonetheless Jobs Day in the United States with the December labour market report due at 1:30 this afternoon, London time. Headline non-farm payrolls seen having risen by 165,000 in the month of December, a pace that will be a modest slowdown from the 227,000 gain that we saw in November, albeit one that would still be broadly in line with the 3-month average of non-farm payrolls growth. As always, the range of estimates for the jobs number is relatively wide. 100,000 on the low, a ridiculous 268,000 on the high.
Who was that?
That was Bloomberg Economics, funnily enough, who love these little weird outlier forecasts, but never mind. I think I
do. Putting tinfoil on, I do think these very much outlier guesses are just literally so people say, "Oh, who was that?" and then they get a bit of free advertising.
Yeah, that's exactly what it is. The second highest forecast, which might be of some more use to us all, is at 225,000, and that's from ABN AMRO. So 100k to 225k is effectively the range we are looking at. But as always, do pay attention to the revisions to the prior 2 months worth of data as well. Meanwhile, sticking with the establishment survey, average hourly earnings, they are expected to have risen by 0.3% on a month-on-month basis, down from the 0.4% that we saw in November, although that would keep the annual rate unchanged at 4% exactly. Meanwhile, in the household survey, unemployment, that's seen holding steady at 4.2% in December, though of course remember that is just off the cycle highs, which are at 4.3%, which we saw back in July of last year. Taking a step back, the payrolls numbers, the labour market report in its entirety seems unlikely to materially alter or shift the policy outlook for the FOMC. Naturally, policymakers are focused on not only the inflation side of the dual mandate, but also the immediate impact of President-elect Trump's early policies, particularly with Inauguration Day now just a week and a half away. As a result of that, it's no surprise to see the market pricing around a 95% chance that the Fed do indeed remain on hold at the January meeting, with around 45 basis points worth of cuts in total priced by the end of this year. As has been the case with US data for some time, the market reaction is likely to focus more on the actual macroeconomic story that the figures tell, as opposed to any potential policy implications of the data. As a result of that, it's likely to be a case of good news being good news for equities and bad news being bad news. In my mind, a bigger move is more likely in the case of a hot non-farm payrolls number, and particularly a hot earnings component, given that participants apparently need no excuse whatsoever to be selling the long end of the Treasury curve at the moment. And as we discussed yesterday, of course, that is likely to have a spillover effect into government bonds globally. And of course, the gilt market remains firmly in the crosshairs of investors at this moment in time. Besides the payrolls numbers, we do have a few other things worth bearing in mind today. Also at 1:30 this afternoon, we have employment figures out of of Canada. The Canadian economy set to have added 25,000 jobs in December, about half the amount that was added in November, while unemployment is seen rising to 6.9% from a prior 6.8%. The next BOC meeting on the 29th of January, we are likely to get another 25 basis point cuts, with the curve pricing around a 4 in 5 chance of such an outcome. And of course, bear in mind that Canada is leaderless at the moment after Trudeau's resignation earlier in the week. And then wrapping up the data docket, we have at 3 o'clock this afternoon, preliminary consumer sentiment figures for January from the University of Michigan. Other things to keep an eye on today, just one Fed speaker on the docket, and that is Goolsbee, who will speak at just after 3 o'clock in a CNBC interview. And earnings today, of course, earnings season gets underway properly next Wednesday. But nonetheless, before the open today, we hear from Delta Airlines, and of course, only time will tell whether they take off or crash land in the pre-market.
Because I'm seeing these so far off now. As soon as you said Delta Airlines, I was like, "Oh God, what's it going to be?" Oh, well, thank you for that. Oh, that was actually your first pun of this whole show. We nearly got through one.
14 minutes, and I squeezed one in right at the end.
Well, thank you very much for that, Mr. Michael Brown, and thank you for the week. Listeners, thank you for tuning in this week. Hope you have a lovely weekend. And yeah, keep it tight, and we will see you all Monday.
We will indeed.
See you later.
Bye for now.
Bye for now.